Welcome back at For the Football. Today's guest is someone I've admired for a long time. I'm very excited about this actually. He's an investor, a serial entrepreneur, someone who helps athletes from elite footballers to other stars make smarter financial decisions and invest their money. He's the founder in InStudio Ventures. He's invested in multiple sports tech companies, and he's got an MBA at Harvard. Please welcome Danny Cortenraede.
That's great. I like how you pronounce it. Thank you for having me. It's thank you. It's we met obviously already a while ago, but I was listening to all your podcasts, so I'm grateful to be here and excited to have a chat with you.
Thank you. No, it's great. I think a lot of people, either athletes or are not into sports, I think they're gonna enjoy this conversation. For who doesn't know you, who is Danny Cortenraede?
Yeah, so born and raised in the Netherlands, from a very entrepreneurial family. So my dad is an entrepreneur, my grandfather. So actually, when I was a little boy, when I was sitting at the dinner table, we always had these entrepreneurial conversations. I didn't realize at that time because it was normal. But later it clicked, and I had definitely that entrepreneurial bug in me that I knew I wanted to start my own business. My journey actually started in the corporate world. So I worked 6 years for Vodafone, big telecom provider over in Europe. Different kind of roles, made some nice steps there. Then I was recruited by Sony. So I worked for Sony. I was responsible for the Vodafone account because I was working there for 6 years and I knew all the people. I was the guy who can manage that account. And after that, for a short period, for 2 years for Tele2, managing 3 strategic accounts, closed a big RFP. And after that, I said, okay, I really wanted to start my own business. So I started with a company that's called Enterprise Media. It's a production agency. So together with my former business partner, creative director, very, very talented guy, I was more on the strategy side and setting up the agency. We worked for Walt Disney, Disney Channel, ABN AMRO, big corporate organizations, a lot of premium content. Yeah, long story short, in the end, I was able to sell my shares. Definitely not a big exit, but just made some money there, and it was a good learning curve. And already was able to make some mistakes, right? Because that's also important. It's a journey. After that, I joined a group as a managing director and partner. I scaled the agency 1/2 that's affiliated to sister company 433. 433 grew out to the biggest soccer community in the world.
Yep.
And I was responsible for the monetization on that channel. So think about working with clients like Nike, Adidas, FC Barcelona, Real Madrid. Around 40 people in my team in Amsterdam. Actually, we did a lot of campaigns and social media management also for athletes. That went well. So we scaled it from zero to a multi-million-dollar agency. And then we said, okay, let's open a second office in New York City. So I moved more than 6 years ago with my wife and 2 little boys at the time to New York to run the business in the States, working with big brands in the States. Budweiser, for example, official partnership with the MLS. Then a third office in Los Angeles. I was able to sell my shares. So I did that and started my own investment firm. The real why was actually that I saw you have amazing entrepreneurs, great solutions, but they just don't make it. If you look at the figures, 80% of startups are failing within the first 5 years globally. Mm-hmm. For me, that number was just insane. I thought, okay, how can we decrease that? So we start backing startup founders, and all in sports and media, because that's my background. That's where we have big passion and where we have the knowledge, where we actually can add value. So we start backing companies with a 2.5 million check based on KPIs and milestones. So it's not that we threw just 2.5 million at a company. You need to hit specific KPIs and milestones. So we made a couple investments there. Later, I launched a later stage fund, companies that need to do at least 1 million in ARR. That means 1 million revenue per year. So we start investing with that fund. So we invested in the Boardroom, company from Kevin Durant and Rich Kleiman. We're the lead investor there, biggest shareholder next to KD and Rich. Michael Rubin is the other investor from Fanatics, obviously the chairman and founder. We invested alongside the NBA equity team in a company called Springbok Analytics. And much more. But hopefully that gives you a little bit of background information.
Amazing. Congratulations, by the way.
Thank you.
What a nice journey.
Yeah, it was.
Let me ask you, I always had something in my mind as an athlete that makes me curious. For example, we've seen a bunch of players, athletes, that they made a fortune during their careers.
Yeah.
100 million, 200 million, 300 million, like Allen Iverson, Mike Tyson, and they lost it all.
Yep.
I'm very curious to hear from your perspective why this happens.
Yeah. No, we see it a lot, right? We all know these stories with if it's in the NFL, NBA, soccer. We're working with a lot of athletes. So in our investment firm, we have a lot of great athletes where we have the privilege to work with. So guys from the Dutch national team, playing for Liverpool, Man City, other big clubs on on the highest level. We have NBA players, NFL players. And what we see is that these guys are getting way smarter. If you compare that from my perspective with 10, 15 years ago, it was always about the big fancy car and the watch and everything and spending money. But I think the questions that they're now already asking, I think that's changing. And yeah, look, and I don't have to explain it to you, but the athletes are earning so much money in a short period and a young age. So they don't have the financial knowledge to really understand, okay, how much money am I earning? What are my costs and how much can I invest in alternative investments, for example? So we are very, with our team, helpful and making sure, okay, we don't make decisions and over leverage ourselves. So to putting too much money in a specific thing. So to answer your question, I think it has to do with just the background and maybe don't have the right people around yourself who can advise you to making smart decisions. And I see it's changing. I think especially also here in the United States, again, if I'm talking with athletes who playing college or now with the NIL, they're making already bigger amounts. The guys and women are getting way smarter. So, and that's something where we are helping, and it's a really important thing for InStudio Ventures because we're working with these athletes. We're involving them a lot in what we're doing and why we're doing it. So tomorrow, again, we have a deal flow meeting. NBA players will be part of the call. NFL players, we have soccer players calling in, and they can ask questions. They can really understand, okay, why is this a great deal and not? So during this period, it's not just investing your money, you're actually learning why. And I think that's a big difference. And yeah, that's something that we're excited about. And we're still not there yet, I think, in general. But
with my experience talking to funds and people at your position, there's your approach is very unique, which you help the athlete understand and learn, right? And while they invest their own money. So I think that's very valuable, 1,000%. And going back to like Allen Iverson and Mike Tyson, all of these guys, what do you think? You said that maybe they weren't backed by the right people. They trusted the wrong people, and you see that this is changing right now. A lot of players, they're trying, or athletes, they're trying to get into more ventures to understand more. Why do you think that has changed from before to now?
yeah, look, I agree. We still see it, right? Don't get me wrong. You still see the wrong people in the industry who trying to take advantage of the athletes. So it has to do a lot with trust. So also, for example, we're working with Jameis Winston, NFL players playing for the New York Giants. We met, but it was first just also meeting with the family, right? So with his wife, the kids, my wife was there, the kids, and having that conversation and to see, okay, how are you acting to your family? How are you responding to your kids? And really understand each other instead of first already jumping into business and trying to do deals.
Right.
It starts very organically and building up that trust relationship. I think, again, that's for me where it starts. So these examples that you're just mentioning, I think it still comes back to, because the athlete, the whole life is all about sports, right? So you cannot say, okay, this person already has the wealth and the financial knowledge to do all these smart things. So, but I think that's something that's changing. Sometimes I feel it's almost becoming cool to be an entrepreneur and investor, right? The athletes want to be like LeBron or KD or Serena, who build up that empire. So they look up to these people who build more actually off the pitch than on the pitch in terms of their wealth. And I think that's a good thing. But again, making sure you surround yourself with the right people and have the people around you that can actually advise you and also make sure you make the right decisions. That's a crucial thing.
What would be the recommended percentage of earnings to invest, for example, in Studio Ventures?
So I would say what we see in general, like you start with where you feel comfortable with, and it's the bigger percentage, 60, almost 70%, I would say, just go into US treasuries, bonds, things that give you 5-6% or whatever the percentage is at that moment. What you don't touch, right? That you have there, you bigger chunk of your money in that's throwing off cash, you can almost live off that money. Then I would say a smaller percentage is for alternative investments. That's depending on your profile. So it's difficult to say does need to be it, but I would say around 10-20% from your total earnings. That's something where a lot of athletes feel comfortable with. And then, look, we also have assets where we're now looking to invest in is the NFL franchise. So we're looking to invest in an NFL franchise, very stable assets. So the risk profile is also different there. I don't know, but if you have these figures ready, but 110 billion media deal is connected to the NFL franchise as well till 2023. There's a scarcity effect. So there are only 32 franchises. These things combined make sure, and it's not something that I say you can do. You can do your own research. It's outperforming the S&P 500 already for 20 years. So it's a stable asset. So that's something where I would say that's already easier to put more money into because these are, again, very stable assets, if that makes sense.
Okay. My friend Josie Altidore become one of the Buffalo Bills.
Yeah.
And we were talking about this. I feel like it's very stable, scarcity.
Yeah.
How do you analyze your deals more like on the number-wise due diligence? Is there like a process that you guys go through every time you see a company that you want to present to your athletes? What's the process looking like?
There's a long and deep process, as you can imagine. So in the beginning, I was looking also myself at more than 1,000 startups per year. I don't do that anymore. That's too much work, as you can imagine. But it was good also for me just to get a feeling in the market. We have a team. We're backed by a team with all kind of different profiles. Head of finance, other general partner, investments analyst. And we just have a process in place. So if we get deal flow, at first we just need to, the first investment analyst can look at this. Who's the team? What's the business model? How scalable is it? How big is the market? We're looking at all kind of different topics. They rate it to see, okay, what's exactly, does it fit our thesis? Then if it's interesting, one of the team people will jump on a call and talk with the founders. With the founders, that's of course already crucial to understand, okay, who are the people behind the company. Then we have multiple conversations and talking with the team, also meeting in person. It's just not only on Zoom, but we really want to understand who is in front of us. And then after talking with the team and doing our due diligence for quite a while, we will, if we think it's a right deal, it will go to our investor committee. So we need to prepare a deck where we explain, okay, what's the market size, who's the team, the business model.
That's after you guys kind of agreed that these make sense?
Exactly. We present it to the investor committee. These are people in the industry, very, very high heavyweights. So for example, a guy who's working in Silicon Valley is managing 3.2 billion for a private equity firm. We have one person from the Adidas family. It's all complementary to each other. Then we present the case. They will make our lives very difficult just to make sure, okay, this is the right deal. If we get 3 thumbs up, then we will move forward. Then there will be another due diligence phase to make sure, okay, we will check the entities, the financials, if everything is correct. If that's all good after 3 weeks of due diligence, then there will be a term sheet. We will involve the lawyers. Then we will sign the contracts eventually and we will wire the money. So it's we will spend quite some time. We're definitely not in a rush. We take our time for our due diligence. And we're involving also the athletes in that process. So for example, let's say again, he's jumping on quite some calls with me just to listen and ask questions. Cody Gakpo, we were looking at an MLS team. He's calling in and he's talking with the CEO from Cincinnati. And can ask his questions, right? So he's part of that due diligence process, if that makes sense.
Right, no, makes sense, and probably they add value as their experience on that matter.
100%. No, that's the combination, right? They have their knowledge as an athlete, so it works two ways.
Right, and you mentioned a little bit like it can take some time. What would be kind of since you scout something that you like until you end up finalizing roughly, time wise?
3 to 6 months.
Okay, that's the standard, or that's
Depends what kind of some other things take longer, but I would say average 3 months. Yeah, I would say that we take our time. Some people, founders, want to move faster. Not sometimes possible, but we it's a lot of money. We're investing multiple millions per deal, so we need to do our due diligence.
how you get that the best deal flow ever. Is because you have like a pool of athletes that you can leverage that as getting inflow, or what's how you're getting all the, because let's say that Buffalo Bills, they want to share something, they want to sell some, you are going to be the one that they're not the door. Why?
Great question, and that's a big thing, right? Because I think on a daily basis, 15, 20 people only are reaching out to me on LinkedIn. They all know you have a fund. They're trying to pitch you, but
there's a lot of funds right there, right?
there's a lot of funds, but it's also a lot of crap, to be honest, right? It's just not the and it's not nothing wrong. People are trying, but for us, it's looking for these off-market deals, these unique deals where normally people don't get their hands on, like the NFL franchise. There are only 6 private equity firms who can invest in the NFL, right? So there's more demand than access. That are the deals where we get excited about and where we want to get our hands on and what we get. So for us, it's really about the vetted deals. So the people in the industry, they really know what they're talking about. If we know, okay, the Adidas family is calling us, we know it's a vetted deal. We know it's legit. Then it's still not we following blindly this deal. If we, working with Kevin Durant in the family office, if we can combine something there, that's super valuable because already more than 100 investments. Yeah. There's strategic value. We're working with other 49ers family office or other people in the industry. And that's for us how it works. We build up the network during all the years and making sure, okay, we get that unique deal flow and get our hands on these deals. And that's what you're looking for in the end. Sometimes it's the athletes, but it's also just broad because of, we're in the right rooms and making sure we build up that network.
So if somebody wants to start a fund, what would be the first steps that they should do to end up in a level where you're getting really quality inflow?
It's starting a fund, I would say it's a lot of work, and you need to have the right knowledge and the right people, right, to making sure you can do this. The GPs in our fund build businesses themselves, so I think that's a big advantage. So you have really the knowledge how to build a company and how hard it actually is. You see also a lot of people, they did their maybe Harvard or one of the big universities, then went to AY or following that route and then starting a fund. I believe the emerging managers is a big advantage. So if you build companies before, we just have that piece plus hired the best expertise from the investment industry and the VC. Combined with that is just making sure you have the right team. And then on top of that, building up your network that's not something that happens within a year, right? You know how it is. We're both not from here, right? We moved from Europe to the United States. That takes time, but just being very committed and making sure you, be in the right rooms. But that takes time, and that's step by step. Sometimes you need to make sure they know you're legit and can actually invest and have the money ready to act if there is a real deal. And that stepping step by step, that's how it worked for us. And grateful to be where we are today.
Yeah, to me it seems like when you started something like this, like other companies, right? It's like there's like that turning point that it's starting to make sense, meaning that, okay, you can convince athletes to invest in you and you can convince the people that you can invest the money to them. And finding that breaking point, I think it may take time and a lot of work.
Yeah.
But I think it was a interesting way to understand how you get to that point. Is there any company in a specific that you spotted very early that you are proud to say that you were one of the first ones?
I think the boardroom is a great example where you invested quite early. I think it's an amazing team, right? With Kevin Durant as a top NBA player. You have Michael Jordan, LeBron James, and Kevin Durant as only the athletes who have a lifetime deal with Nike. KD has 4 Olympic medals. He's on the top there, right? It's to being able to work with a person like that. And Rich, I think, is an amazing person who's very great networker and entrepreneur who has the vision to build that empire for KD, but also with the boardroom, this community for business, sports, and culture that's growing day by day and is really a brand now in the industry and not only online but also offline with all the events and the members club that we recently launched in New York, and also LA will now be here in September. We have Game Plan with CNBC. It's a strong brand in the industry, and we're grateful to be part of that journey. It's doing very well, not only from a branding perspective, but also just in terms of revenue and the people behind it. There's still, I think, a lot of potential to grow the company, but that's for example, one that I think is a great example.
No, amazing. And for the investors, how long does it take for them to kind of see the returns of that?
Yeah, so we are an investment firm, so we have a clear exit strategy, right? We need to understand, okay, how does this work, and how can we say, okay, this is the exit strategy, and reverse engineer from that. So we have companies in our portfolio that has an exit within 3 to 5 years. So then we can already distribute money back into the fund. Normally, these standard funds are a 10-year hold period.
So basically, you sell one company that you invested in or your par, then you reinvest it, or you give it back, or there's
yeah, it's going back into fund. We're looking at a construction currently to see if we can already distribute money back to the investors. Again, normally these funds are for 10 years, so it's not like real estate. You're flipping within 6 months. This is a longer game, right? A company takes time to build,
right?
But then also the multiples are higher, and what we know is that we're diversifying. So we will have 15 to 20 companies in this fund. So then we spread it, and we're aiming to for a multiple from 3 to 5x within that period.
Okay. And for the people who doesn't understand how you guys support these companies that you invested in.
Yeah. That's crucial for us. So that topic, how you support, right? When we not can add value to a company, we will not invest. Because what we don't want is just throwing money at a company and then hopefully our money will do something, right? So we stay in our niche, we stay in sports and 20% media, because that's what we understand. That's where we can actually add value. If there's a biotech, fintech, we will not touch it because that's not something that we understand. If we're looking at the sports, we built up the ecosystem and the people within the company who can actually add value. So we're looking also to have a board seat at these companies, being involved and being like also the GPs. We have the entrepreneurial experience and can add value there. Plus we have built up a whole ecosystem with venture partners who can add value. We have the athletes who can be very involved, who can be a face or can be actually... We're making introductions. So let's say, for example, we invested in the Springbok Analytics, that company that's a software for MRI scans. We made all kind of introductions now in Europe. So they have already 20 franchises are using it. The NFL is behind it. But we took the lead and make introductions in Europe for that. So that's an example where we always want to make sure, okay, what kind of value can we add? And that we really understand what we're talking about.
Mm-hmm. Makes a lot of sense. When you step in, you already know that you're going to increase the value of that company by
X. So that's great. Then we feel comfortable going into the deal and putting in a bigger check.
Do you think that also you get a better deal because of it?
100%. Look, and that's definitely also one big of the advantages. Like with a fund, the size of the fund and the size of our check, that puts us in a different bucket. And because we can have that strategic value, we will have the highest class shares. We can ask for a board seat. We have, for example, a 1x liquidation preference. That means when things are going not well, we as investors get our money first back. If you go in by yourself with your angel check, because you also see a lot of athletes are doing that, right? Putting 50K there or 100 or 150 or whatever the amount is, doesn't matter. You don't get the same requirements or the same terms as we do as a fund. Plus, you don't diversify. You're going into one deal, and if that doesn't work, you lose your money.
Right.
This is our core business. We have a whole team is doing nothing else than the whole day looking at deals, making sure we're investing in very, very high quality deals. Plus, we can add value. Plus, we have better terms. So it's a different way at looking at it.
Right. And those players, athletes that they want to join, do they need to have certain requirements? Maybe certain check, but also maybe the personality. You are looking for people who want to be more involved rather than just here is the money, or you do both.
Yeah, we want to work with good people, and that sounds cliche, but what we're doing is also bringing these people together with events, and we have an athlete council. So we will have the next one in September. So 25, 30 athletes will call in. We have an amazing speaker. We also do this offline. So these athletes are connecting also with each other. So the NFL with the NBA and the soccer players, it's just a great group to make those connections. So for us, it's really about good people and not arrogant, but just humble people who really want to learn from each other and do something. That's also what we get back. The requirements, look, we're working with accredited investors. So that means, right, you have a specific income. The net worth above at least 1.5 or 2 million on the top of my head, an income of 200 or 300K per year. And then normally the check size is minimum 500K. But what we see, we also sometimes do with athletes, we can lower that because there's that strategic value.
So there's also like non-athletes investors?
Yeah. It's high net worth. So people, entrepreneurs, we have family offices. It's a mix, but mainly people who have passion for sports or media and who would love to always dreamed about to be a minority team owner or want to be part of what we're doing and have that great group of people. That's sometimes some people say, I want to already be around all these people that are part of this ecosystem. That's for me already reason enough. I know I will make money with investments, but this part is that access is already such a valuable thing.
So talking to the athletes, which athletes are already current or you guys had previously?
Soccer players, how we call football, right? So we have Cody Gakpo, for example, playing for Liverpool, Nathan Ake playing for Man City, Daniel Malen, Aston Villa, right? A lot of Dutch national players. We have NFL players, so James Winston, for example. Alec, also a former NFL player. We have some NBA players. It's a whole mix of athletes. Some people we don't mention online, but they are big names and who will show up on these events.
Okay. When is the best time for an athlete to start investing? And it could be with you guys, could be real estate, could be whatever. But what would be your advice to somebody that just signed the first contract? Is that the time to do it? Is a portion just a portion of it?
Yeah, I would say also just take a step back and have the knowledge, right? You really need to understand where you're investing in. I think that's where it starts. So I would say let's start as early as possible, but with the right knowledge. Because without the right knowledge, you start investing because your friend is saying this is a great restaurant, you should invest in it, or this is a great merch brand. And we all see these kind of things just don't.
But also, like as a former athlete, I've seen a lot of athletes that they don't have the time. They do have the time, but they don't want to put the hours because they are focusing on one thing, which is just playing. Yeah. So it's like, how can you get to a point where you get all that knowledge that you can make a decision and say, okay, this makes sense or it doesn't? I think at the end it's more like, do I trust these people that is bringing me the deal or not?
I think that's what it is, right? In the end, so making sure you connect with the right people and already showing up to. We had a program in New York 4 or 5 weeks ago where 15 athletes flew in, NFL, NBA, NHL, 2.5 days, so after season, but they commit, they were hungry to learn, and they make 2.5 days. We arrange everything for them, flights, hotel, everything was arranged. But they had a whole program, so about entrepreneurship, innovation, dinner with Michael Rubin in the evening.
Yeah, thanks for the invite.
Yeah.
With Judith.
Next year.
Judith invited. No, you did invite me.
Yeah, right? Yeah,
Yeah,
exactly.
you did,
Yeah,
you
yeah, exactly.
Yeah.
So we had a dinner with the CEO of
Fanatics.
David Solomon from Goldman Sachs, one of the top financial leaders in the industry. Fanatics Fest at the end. The point what I'm trying to make is these athletes are showing up. They're all busy, but they are hungry and they want to commit to something like this and they want to learn. And there, in a trusted environment, you can meet the right people and connect and can talk about investing. We spoke a lot about investing, about what and who and when. I think that's where it starts, making sure you show up to these kind of different, and it doesn't have to be with us, but with groups that you trust and that you know they are legit, and doing your homework, doing your research, and making sure you really understand yourself, what you're talking about. And then step by step, don't go into big already, just step by step where you feel comfortable. And then start investing early on. I think it's smart. I think it's something, if you want to build up that generational wealth, without investing, you will not make it, because putting the money in the bank will not work with all the inflation, right? You will just lose your money. Real estate is also getting difficult. So I think you need to diversify. But again, what do you want? Where do you have the passion? And where do you think you can really add value and can actually learn from? But I would say start early.
I wish we had these resources, or I knew about these resources before.
Yeah.
And I think that's the biggest challenge is how can you put yourself in front of all that people at that young age, that they can see what you can bring to the table.
Exactly.
Maybe referrals, maybe like the older guys that you are working with on the team. They tell you about, hey, you should do this, you should invest this or that. So I'm just, it's not a statement, but it's also like a reflection of maybe the older guys in the locker room should have a bigger role on like passing that information to the younger generations.
100%. I think that's what you see is happening. I hear it already more in the locker room, and things like this are happening. But also maybe the league can take more responsibility there and do research for the athletes. We were talking with a couple of NHL players. I think there's also a big opportunity to take a bigger role and making sure these guys are getting more access to these kind of deals. And they were very grateful to show up to that event there. And they were so excited and pumped about it that they will talk about it in their locker room, and hopefully that will help. But we're getting there step by step, right? It's growing. Let's make sure it's the highest quality.
Is there anything in particular that, that surprised you working with athletes?
Look, you have all kind of different athletes, right? It's I am working with a lot of them. Some are super organized, and if you call them or there's a question, they will be on time for the meeting, prepared, have all their questions ready, are structured. Some of them, they are totally not. It's the opposite. Too late for a meeting, last minute cancellation, or no cancellation at all. Right? That happens. That's also the responsibility from the athlete, right? We're offering, you can take it or not. I think so. Did it surprise me? No. I'm working already for many, many years with athletes, so I know it can be busy and there's a lot of things going on. But I think if you want to be a professional, also being seen as a professional investor, entrepreneur, you need to also take that responsibility and show up at these moments, because that's a normal thing in the business world, right? And also for an athlete, because they're also working on the highest level, so it's also there. But I think if you want to move into that direction, you also need to take that seriously, if that makes sense, right? And making sure you then show up and commit and make sure you do your thing there, because then that's where the magic happens and where then you start growing.
And what about like the competitiveness? What about that? For me, when I transitioned from playing to not playing, what I saw was that the world, it goes slower than I was used to. Meaning that when you have a game, you play Saturday. If it goes well, great. If it doesn't go well, you have, a quick turnaround. In the next Saturday, maybe like 3 days later, Wednesday, you have another game, so you're already like thinking on that.
Yep.
And all of a sudden, when you go into the workplace, it takes time, right? We're talking about deals that may take 6 months until you start, and then you have an exit strategy of maybe 3, 5 years, 10 years, right?
Yeah. Yeah.
So, do you see that impatience on them, or they are more like, okay, I'm here for the ride, here to learn?
Also, there are different kind of profiles. Some get it. It's they are in for the longer ride, but you notice that they're a little bit impatient. And to be honest, I'm the same. For me, I also want to move quickly, but some things just take time, right? You need to look at it and be thoughtful and give it some time. But yeah, I see that definitely in the athletes. But it's also just learning about what kind of industry are you in. I think the startup world is quite quick entrepreneurship, right? You need to act quickly, and there's a fast moving pace. But we also working with bigger corporations or the leagues. That's just a longer process. These are huge organizations with so many layers and so many different decision makers.
Politics,
where you need to be able to move around and do your thing, and that just takes time.
Yeah.
And that's
Where do you see the industry is going?
The sports
industry.
500 billion right now will go to 600, maybe 800 billion. So it's growing. There's definitely a growing market. Sports technology, around 2021, it was 13 billion, 2022, 30. We will go to at least 103 billion around 2030. So also there we see it's a growing market. There's so much opportunity also on that innovation part.
Do you see like on products? Do you see like on fan engagement? Where do you see it?
So if you're talking about sports technology, 43% is going into fan engagement. So that's a huge part of also where we are looking at, right? All these solutions to engage the fans, not only on the pitch, but also off the pitch. If you look at the Intuit Dome, right? I don't know if you've been there,
Beautiful.
but it's amazing. 2.2 billion, what Steve Ballmer built there. But it's almost that you're walking into a living room. That's what they want to do, right? You don't have to use anything anymore. So you use one time your Face ID, you put everything in there. You just walk into the stadium. Maybe you grab your beer or your soda or whatever you want, your food, and it's so great how they made everything
effortless.
The data that they're collecting, it's all personalized, exactly where you are looking for. So I think that's super interesting and engaging, the things that are happening on that side. The SoFi Stadium here in LA, 5.2 billion, amazing, right? Unbelievable what they've built there. That's what we're looking at with our firm, right? To see, we're almost creating our own ecosystem where we have the premium assets like the NFL, the NBA. On the flip side, the emerging leagues, WNBA, and the rest is all sports technology and backed by big data. So we see a huge opportunity in the sports market. Again, it's growing, and we want to create an impact on in this field, and we have access to these deals. Also youth sports and women's sports, don't forget that.
For sure. And going back to kind of the technology and fan experience, you've been to the Sphere in Vegas. Have you been to the Cosm here in LA? And the Cosm, do you know?
Yeah, I know.
Is, right?
I know the concept.
So I feel like anything that gets you closer to the action in the most seamless way, it will have a hit.
Yeah.
And outside of the fan engagement, where do you see? You said 40% or
43% is going into fan engagement. Yeah.
What would be the other areas that you guys are focusing? Or that you see growth?
Yeah, where we see growth. So sports technology in general, fan engagement, big part of it. We're looking at wearables, something. Big data is just a very important thing for us. Everything is backed by big data in that part. And then what I said, so youth sports and women's sports is something that's still where we see a lot of opportunity that's growing. So NWSL, the NWNBA, NWSL is something where we're looking at. So since 2019, it grew with 500%. So what does it mean? Corporate sponsorships are more willing to pay for these eyeballs. Valuations went up quite significantly. Right? I don't know if you were following it, but Angel City FC, 250 million with Bob Iger from Disney. That grew significantly. So we're looking at it critically, because what we don't want is just following a hype. A lot of people are talking about it, but we also, some things are just already, we don't believe in the valuation. So we're looking closely at the fans, the city, and what kind of other things make sure we can really explain it to ourselves, the current valuation. But yeah, that's for us the current thesis in this fund.
Mm-hmm. In these ones, for example, that they may lose money, but the valuation increases a lot. Is it something that you guys explain to investors as well, or because I'm assuming that there's companies that you guys want to see the return right away.
Yeah.
There's other ones that you may lose money, but at the end, in 10 years, it's gonna be valued like 10x.
Yeah.
Right. How do you approach that when you talk to investors?
You need to be able to explain, okay, what kind of business are we looking at, right? If you're looking at the franchises and, for example, the NFL or the NBA, where we spoke about the NFL, 110 billion. For the NBA, it's a 76 billion media deal. So that is such a big part of, for us as investors, that we know this money is coming in. The MLS, right? That media deal is still not there yet, right? It's quite low with Apple. So 2027, they will renew that. That's a big important moment for the MLS, right? You see Miami, LAFC, they have quite a high valuation. We're looking actually at 2 MLS teams right now. Yeah, and that's the question. Some are able to run the business in quite a lean and great way. So they have great figures. They get these corporate sponsorships on board. But for us with the fund, especially with this fund, we want to see, if we're looking at the sports technology businesses, we want to see a proven business model. We want to understand the CAC, the acquisition cost per user. So we have these figures ready, and then we can go in with a bigger check size. So we're investing around Series A, Series B, if that makes sense. So they're getting to profitability. But we have these figures, and then if we invest, we can actually start scaling it. But sometimes we have these franchises or leagues, they still losing money, but then you need to believe on the long term, right? And that's something where we sometimes take that chance, depending on the specific city or league. But we will also invest in women's sports there, and there are some they don't already have a profitability, but we're in there for the long term, and we do this with a strategic group that actually know what they're talking about. We have previous owners. So we have the knowledge to actually then scale it and make it profitable in the end, if that makes sense. Mm-hmm. Instead of also just following there, putting some money to work, and you don't have that value what you can add in.
Yeah, so you potentially can change your strategy and the way you invested in NWSL, because you want to stay there maybe for 50 years instead of having an exit, or there's always that target on exiting in 10 years.
With the fund, normally there is, so we need to have also clarity there. Okay, what is possible if we want to exit? And that's more difficult with these franchises, right? It's not that easy as with a startup. So you have secondaries sometimes where you can look at, but there's a little bit more complicated than just looking at a company.
Because when you look at the owners of those franchises, they usually stay there for long time, decades, right? So how do they do they look for partners like you guys that they know that in maybe 5 years they will be gone again and have another round of people, or they look at you to somebody that you're going to hold the right with them for a long time?
Yeah, it depends which one, but I think also with the NFL you had all these amazing wealthy families who were just the owners. They opened it up for private equity, right? Up to 10%. I think is a smart decision, because also with the families, look, they have a lot of money, they made a lot of money. But I think opening up for private equity right now makes sure you also have companies like ourselves with different knowledge and more focused on innovation and tech. And we can bring in these portfolio companies, maybe where the families don't, maybe they have definitely access, but this is our core business. We can bring this to the table. So if you look at the digital transformation, opening it up for private equity and actually scaling it right now, this is fast forwarding everything, and it just makes sure we keep improving the league. Right. And that's also for other leagues. You see that also with the WNBA or the NWSL, where you opening it up for specific strategic investors, and they're critical. It's also, we spoke also with the legal team there. It's everything for the long term, right? Because again, it's not something, to your point, that people think, okay, you can invest something and with a year or two. You need to have also the resilience and making sure you're in it for a little bit of the longer term.
Right, and they choose the ones that they wanna.
Oh yeah, sure. Yeah. It's a process. You cannot just enter the
Even
leagues.
if you have the money,
No,
you
no,
can.
no.
You
It's
just got to
all.
be able to
Oh yeah,
provide value to them as well.
100%. Yeah.
So, and we talk about media. Lastly, where do you see like kind of the media landscape is going?
Yeah, so we're focusing mainly on sports and then combined with media. So a company like the Boardroom is a great example. So it's a mix between sports and media. It's changing, right? If you also look at my own two boys, how they consuming media is totally different than I was watching the total football game with my dad for 90 minutes. That's definitely not happening anymore. My oldest, he's watching then the highlights and then is doing something at the same time. So I think, how are you doing this, right? So that's definitely something that's changing in the landscape. For us, that needs to be that connection to media. So media rights, if that makes sense. There, we still see a big opportunity. Live sports is still something that people are watching the most. So all the TV, everything just decreased. But live sports is still something that people want to watch. So that's something that we're looking closely at and looking at these media rights, what you saw, the numbers we spoke about it multiple times. That's something where we're excited about as a firm, combining that in our whole ecosystem. So for us, it's more media that's related to sports, if that makes sense, than just specific looking at all kind of media solutions. So there always needs to be that angle to sports. But yeah, there are great solutions where we're looking at. And yeah, that's where we are today.
Okay. No, amazing. I mean, we look at Netflix, all of these big players that, they want to do like a tennis event and they bring everybody together, they do it, they stream it, and they've been highly successful. I think they will keep doing it. So yeah, it's interesting where it's going, and you're coming from, the affiliate of 433 at some point. They've been doing such an amazing job on like scaling that. Do you think that social media, like on platforms, it will still like be very relevant, or it's already saturated? Even like podcasts. What are your take on that? Not just on like on the investing side, but like you as a person, what do you think?
No, still look, I still believe in platforms like this, the organic content. Look, I was running the agency Wanna Haves, and I saw 433 growing to the world's biggest soccer community. I think at that time it was just a great platform who was using user-generated content that worked. There was no shortage in soccer content, right?
Yeah.
But finding their unique proposition and called it the locker room fun that time was working. I think it was also timing, right? Just at the right moment, at the right platform, and growing that. So I believe there's still much more room for growth there. I still we're not in the end of the social media, right? That's still growing, and that's also what we are focusing on, and especially in the younger generation, they are consuming their content. If you look at Google, they're using TikTok as their Google, right? If you want to search for something, a restaurant, you put in it there, and then you look, okay, how does it look, instead of going to Google. So that are just numbers and things that are happening in the space. So I still believe there's so much more to grow. What will happen, I don't know, right? With the different platforms, the algorithm from TikTok is amazing. I think there's still, if you use it myself, if you like or just watch a video a little bit longer, it already changed my algorithm after one or two videos. So I think that's an amazing thing to see. I think other platforms can learn from that, and that's also something that we are following with our firm to look, okay, what can we do? I still think we have some room to grow for growth on that front, and using social and the branding even more, especially with the people that we're working with. So yeah, still a lot of things for growth.
And lastly, what would be your advice that you would give to somebody that may not have the means, to invest in a firm like yours?
Yeah, look, if you don't have the resources or the for to start to investing in a firm like this, just keep doing what you're doing and making sure you're passionate about it and following your dreams and making money. Look, in the end, are you happy? Right? It's not about money. If you're just doing it for the money, you're doing not the right thing. So I think, but if you want to build up generational wealth and doing smart things, following your dreams, doing something what you're passionate about. Also, sometimes people ask me about entrepreneurship, right? But it's so hard, man. It's not easy, right? If you just do it for the money, just quit right away. Just stop doing what you're doing because it will not work. I know it. I built multiple companies also with this one. It's just not easy. And if you are resilient and do something that you love, I think that's what starts. And trying to solve really a problem or doing something and creating impact in the industry. Look, what we are doing with the firm, we're investing in youth sports. I have 2 little boys myself. That's why I get out of bed. It is a historical moment with women's sports, and we investing in that and can make a change there. We investing and making impact with NFL or NBA and helping the athletes. That's something that triggers me personally. So I would say it always starts with following your passion and that you're really passionate about. And then maybe depending on also on your age, I would say, where are you? I think in the early 20s, just try a lot, just do a lot of things and surround yourself with the right people. I think that's always helped me. Always looking for people who've been there, playing on the highest level and mentor me. That fast forwarded always things for me personally because I was in the right rooms and people who could explain to me. I was already investing in real estate from a younger age, building up my portfolio there in the Netherlands. And yeah, in the end, that you can get the fruits from that. But it's also because people had smart constructions and things, and step by step.
Is there anyone in specific that you can name that gave you great advice or hold your hand and say, come here, son, I'll show you how it's done so you can do it?
Oh, you say the word son, so it's also my parents. That's where it started. It's the entrepreneurial family and starring my dad and my grandfather actually. And I don't say that often at podcasts, but my grandfather was definitely also an example for me to see. And a lot of also my dad and my parents and people in the family say that I act a little bit like my grandfather and do things like he was doing. So I think that's something just, well, how we started the conversation, right? Growing up in an entrepreneurial family and maybe able to take some risks, but in an honest and good way and working with good people and thinking about my grandfather was already start investing in real estate during his time with his business. That you see that and you listen and think, okay, and he's explaining why and how and right. That's already how it started for me, to be honest. And then later in business life, all kind of other people who I now forget and I need to give credits to for sure. But it started there.
Amazing. I think we are done.
Thank you so much.
Thank you so much, Danny Cortenraede.
Thank you for how you pronounce it. And thank you for having me. Appreciate it. Always great to chat with you. And let's keep
Hope
going.
you had a good time.
Absolutely. Had a great time.
Thank you.
Thank you.